Welcome back to the Wall Street Podcast. Today we're doing a deep dive into Bank of America's latest Global Fund Manager survey. It just came out August 10th. This report gives us that real-time pulse check, right? How global managers feel about the macro picture, risks, where they're putting money, plus specific thoughts on AI, gold, and crypto.
And the big headline right away is the sentiment. It's actually the most bullish we've seen in this survey since February 2025. Cash levels tell a story too, down to just 3.9% of AUM. That's historically quite low. Suggests managers are putting money to work.
Interesting. Okay, let's unpack the macro outlook then. The survey says 68% see a soft landing.
That's right, a strong consensus there. But, and this is the catch, global growth expectations are still, well, pretty tepid. You have a net minus 41% expecting the global economy to weaken. So maybe a soft landing, but not necessarily a booming one.
Right, a landing without much lift perhaps. What about rates and the Fed?
Rate cut optimism is the highest it's been since December 2024. And looking ahead, over half, 54%, think the next Fed chair might need to use QE or even yield curve control to manage the U.S. debt.
QE or YCC, okay. And trade. Any consensus there?
The expectation seems to be settling around a 15% final U.S. tariff rate on the rest of the world.
Got it. Now, inflation is always a key topic. What are managers thinking?
We saw a net 18% expecting higher global CPI. That's actually a 3-month high, so inflation concerns are ticking up a bit again. On the other hand, sentiment on China's growth improved. A net 11% expect a stronger Chinese economy, which is a 5-month high for that reading.
Okay, so a mixed bag globally. Let's pivot to market risks. What keeps managers up at night?
Well, the biggest tail risk hasn't changed. Trade war triggers global recession, still number one, cited by 29%. But right behind it, you see rising worry about inflation sticking around and preventing Fed cuts. That's at 27% now. And concern about an AI equity bubble is gaining traction too, up to 14%.
That AI point is interesting, especially when you look at crowded trades. Long Magnificent 7 is still the most crowded, right? 45%.
Exactly. Still number one. Short U.S. dollar is second at 23%. But here's the nuance on AI. Despite the crowding, 52% of these managers explicitly say AI stocks are not in a bubble. And 55% believe AI is already boosting productivity. So there seems to be a fundamental belief underpinning that crowded trade.
So crowded, yes, but maybe for good reason in their view. Okay, how is this playing out in asset allocation?
Global equity overweight is up to net 14%, highest since February 25. But here's a really striking number. A record 91% think U.S. stocks are overvalued.
91%, that's huge. Where are they seeing value then?
Emerging markets. A net 49% view EM as undervalued. This really points to a strategic hunt for better value and growth outside the U.S.
And does that translate into actual money movement, regional shifts?
Definitely. There's a clear rotation out of the Eurozone and into emerging markets. The EM overweight is now net 37%, the highest since February 2023.
Okay, EM is in favor. What about sectors?
We're seeing increased allocation to utilities, energy, and financials. At the same time, they're cutting back on healthcare. Its overweight is the lowest since way back in February 2018.
Interesting sector shifts. And finally, what about alternatives like crypto and gold?
Crypto exposure is still pretty minimal. Only 9% of managers report having any, and it averages just 0.3% of their portfolio. Gold is a different story. Almost half, 48%, have exposure, averaging a more significant 2.2% of their portfolio.
So bringing this all together, how does this fund manager sentiment impact, the average person listening?
Well, it has a direct impact. What the Fed might do about debt that influences loan costs for you, potential tariffs affect the prices of goods you buy every day.
Right. And where these big funds are moving money, rotating from the U.S. or Europe into EM, shifting between sectors like healthcare and energy.
Exactly. That directly shapes how your retirement account performs, how your personal investments do. It underlines how interconnected global finance is with your own financial picture.
So it's worth considering how these professional views and strategic shifts reflect the bigger economic currents and ultimately how they shape the financial landscape and opportunities available to you.